and welcome to the Housing.com webinar on the important lessons that the real estate sector has learned from the year 2020. I'm Jhumur Ghosh, Editor-in-Chief Housing.com News, and here to give us some great insights on the matter at hand are my panelists. I'll go one by one. Chintan Sheth is the director for the Ashwin Sheth Group. Chintan, great to have you here.
Hi everybody.
Hi. Anuj Koradia is the director. He's the managing director for Dosti Realty. Anuj, hi.
Hi, Jumur. Thank you.
Yeah. Rusham Shah is the promoter for Hubtown Limited.
Hi, good afternoon, everybody.
Manan Shah is the managing director for the MICL Group.
Hi, thank you.
Samyak Shah is the director for Marathon Realty. Hi, Samyak.
Welcome to all your viewers, and we look forward to this one.
Yes. And a very warm welcome to our Facebook audience as well. So I'm going to get down to the questions right away. Anuj, let's start with you. 2020, an unprecedented year. It has changed the way we're doing business, the way we are living, practically the way we are thinking and approaching things. The real estate sector, like any other sector, was completely unprepared for this pandemic. What have been the biggest lessons for your business in the last year?
Thanks, Jumur. So, definitely the year 2020-21 has seen lots of challenges and new opportunities for growth, new opportunities for driving sales, improved focus on digital marketing. So, I would say that the year overall has been fairly challenging for the first 6 to 8 months. But due to various measures, be it announced by the Maharashtra government or by the central government, by passing on various reforms, especially the stamp duty cut in Maharashtra. The last 2 to 3 months have been phenomenal for a lot of developers across MMR.
Yeah.
And I would say the most important learning in the lockdown during the pandemic was to keep in constant touch with your stakeholders, your customers, your contractors, either give them project updates, project photographs, the labor count, and so on, just to keep them engaged and have them confident that their dream home is moving on track and will be delivered on time.
Yeah. Chintan, what about you? I mean, Anuj has taken a slightly optimistic view, and that's great, but I remember the first two lockdowns, there was no scope for optimism there. Tell us about your business. What has this entire year, what have been the lessons for you?
Thanks, Jumur. So 2020 has been an absolute roller coaster ride. I mean, everybody predicted 2019 end December or the first quarter of 2020 to be the turnaround pre-COVID. And we were seeing the green shoots in sales, green shoots in the economy. And then lockdown hit us, COVID hit us, and I think March, April, May, April, May, and most of June, I think people were just finding a bearing. We were dealing with the unprecedented labor migration back home ourselves. I mean, I think most of the developers here are having enough labor. I think maybe in the tunes of even thousands. So managing them, making sure they get their food and their supplies and on time without creating any sort of a law and order or a chaotic situation. So those 2-3 months were, I think, mainly management of the labor side. And then once post June, when we were allowed to start work again, then getting those laborers back. I mean, I think that challenge still exists today, because even now I think Mumbai is not at 100%. But I think larger projects where there is space for people to stay on site, or there are huge layouts, so that those are much more easily managed today. So the labor side has been a huge challenge. Apart from that, cash flows have taken a huge hit. I think till May, June, most people had no idea whether all the bookings that they had in the previous quarter would even continue, or even people were canceling or making withdrawals. Home loans were getting cancelled because people lost jobs or salaries were cut. So I think June, July, August was all about just getting your house back together and making sure all your long-term or medium-term Excels, cash flows are in place, going back to your bankers, going back to your customers, like Anuj said, communicating with them, giving them the confidence that you're still around and you are working very hard to get things back on track. Yeah. But I think nobody foresaw the real appetite that this Indian market has for homes. And I think the whole 3-4 months of staying in a small home somewhere locked up with, I don't know, 8-10 members of your family really brought out a new angle to the desire to own a home, to own a larger home for many places, many people. And that actually just was like, the testimony of this last 3 months of sales, buoyed by the stamp duty cuts and all that was, it has given, I think nobody in the market anticipated this kind of a response. I think even the best pundits were shocked by the results that came out. So for anybody to say, what to expect from 2021, it's a tough call. But I am with Anuj. I am very optimistic. Things are looking up. Things are looking better than they were before. And one thing has definitely been established is the impetus on buying a home to owning that asset, and that has come across the board. People earlier advocates of not buying and renting and co-living and all those people have jumped fence, and now everybody wants to own a home. So that has come across multiple surveys, not just in India but abroad as well.
Yeah.
So that is definitely a huge positive in the short to the medium term.
Yeah. So Manan, how did your business, cope with this roller coaster? And I think to call it a roller coaster would be sort of an understatement, but for want of a better word, we're going to go with that right now. How did your business cope with it? Firstly, how hard was it? How hard were you hit? Do tell us.
So, in the month of March, when first time the lockdown was announced, every second day you're listening that Europe is shutting down, UK is shutting down, America, the economy has gone haywire. And every day, we were sitting at the office before a couple of days before the lockdown that what are the next steps? Because being in the construction industry, it's absolutely impossible to operate like an IT sector. But so that was the first time the company took a step of shutting down the head office. And we started developing some kind of an infrastructure from where a lot of people could work from home. So though the construction sites were shut down, there were a lot of other aspects which we had to cover, like our suppliers, our contractors, the laborers, and the most important is our customers. So, all the customers started calling up, what is going to happen? What's the next step? They started panicking that I've just booked an apartment 2 months back and I don't know whether I'm going to be having my job or I might lose the job. What will happen to my bank loan? And there were hundreds and hundreds of questions which, we could see coming up. So there were a couple of things which we did, which helped securing these people. Like our CRM team was completely on the job full time, and what we did is we give them a breather. Like till the time the lockdowns there, don't worry, you don't need to pay us a single money. Nobody's going to raise any kind of demands. So at least these guys had a peace of mind that till the time I am not going to officially have lockdown opening up again, I don't have to worry about the other expenses. So we secured our customers somehow. Even the laborers, we had, created a lot of these labor camps on our site itself, which were sanitized on daily basis. We gave them a lot of medical facilities and food facilities. So few people who wanted to leave, we even got them transport arrangements done because, they've been continuously getting calls from their family that come back home. We think Mumbai is not a safe place to stay. And so whoever wanted to go back home, we got them a transport arranged. And so these were the, initial impacts which the company was taking a hit because nobody could foresee how long the lockdown would be. And I'm sure like majority of us who were there on the panel or even people who are listening never knew what the term lockdown meant, right? We've never seen it before in our lives in probably in past entire 4 to 5 decades. So these were some of the hits, and we could cope up with the lockdown. Like post August, things started easing up a bit. People started accepting the fact that yes, COVID is there. You have to live with it. We don't know when it won't, it will go away. So better to accept it and start working towards a newer future, I would say.
Yeah, yeah. Rushank, what were the challenges that you as a business, as a proprietor that you faced?
Yeah, hi. So I guess we face a lot of the same challenges that everyone spoke about. So kind of we just use that time. It's the real estate business has been going through a tough patch for a few years now. So all of us really, at least in our organization, we hadn't had the time to sit and just replan. So we took that a little positively. We just said we replan all the projects, designs, because otherwise you'd always been running around.
Yeah,
We faced all of the problems that everybody else faced,
yeah,
and we did some of the same things.
yeah,
But to add to that, it just gave us all of us. So we're sort of 5 of us in our promoter group, in the management. So us and all the head engineers and all of us, so around 15, 20 decision makers in the organization. It just gave us a time to 3 months of or 2 months of sort of planning and replanning and looking at the way ahead. And then towards the end of the year, like everybody has said, it was a welcome surprise. I think one of the things that this shows is that, the government can play a huge role in boosting demand, right? So hopefully, if we had done this 2 3 years ago, we would have been in a much better position to survive the 3 months or 4 months of lockdown, right? So, we don't look at this that we need basically a 100-year pandemic to help the real estate industry, right? If we keep doing sort of positive, so if you just look at the registration data, I think the government probably earned more in 3 months of 2020 than they probably did 18 months prior, right? Just from stamp duty, even though the stamp duty was reduced. So I think if we take that, and even once the pandemic is over, once the effects of the pandemic are over, we sort of utilize those lessons, I think real estate can really start growing, and that would be good.
So, Samya, Rishank made an interesting point, and that's one way of looking at it, that at least, during the first lockdown, because everything had come to a complete halt, like you said, everybody was just trying to get their bearings. Was that also a time of introspection for businesses? Did that give you guys, some time to sort of re-look at things and, like he said, replan? Has that been your experience?
Yeah, absolutely. So the challenges, I think most of my fellow panelists have clearly spelled them out. One specific challenge I think we all faced was also sort of the changing rules, But at that point, you couldn't blame anyone. It was such a new situation for the government, for everyone. So there was so many different rules that were changing. So what to do when was unclear. However, I think we as a company have always looked at challenges as an opportunity as well, So every challenge comes with an opportunity. And so from the introspection that happened in those 3 months and the experience we've had post that, there have been really some key learnings which we hope to build our business on for the future. And some of them are, not to ignore your most important stakeholder in this industry, who's the customer. I think as much as...
Add a point here, just taking a page out of what Rushan said, I think that if we had this thought process, say 10 years ago or 20 years ago, I think, the trajectory of the business might have been different. So I think this has been an important change for all of us.
Unfortunately, it takes a crisis for you to make introspection and to think long term. But just coming back to my point, even in those 3 months, at that point, one of our most important things was how to take care of the labor we have on site, because they couldn't go home. We weren't really getting all the cash flows that we would have liked from customers, but we pulled in some funds. We requested some of the people to sort of donate to us through our trust so that we can take care of them. And it was very surprising to see a lot of our customers actually stepped up. They came in to give contributions, and whenever we went back to them and explained to them exactly what happened, as long as they could see the intent, they were really ready to back us up. And so much so that some people actually paid in advance. They were not even supposed to make the payments for a future milestone, but given the situation, they were happy to make it. So one big learning obviously is that you cannot ignore your customer. And I hope this is something we take forward, much into the future with our business and with the real estate business in general. And the second thing, I'll just quickly finish that, is agility. I think any uncertainty, there were times when we used to make 3-year plans, 5-year plans. I think that's a thing of the past. Right now, I think you should just see 3 months at a time, and probably 6 or maybe a year at the most. And not just the key decision makers, but the entire organization needs to be built for agility. I think that's something we learned from this experience. And it's very hard in a industry like ours, because we are not a digital industry. So many stakeholders, so many different people in the whole business cycle. So it is much tougher for us, but it is something we will have to build to survive.
Absolutely. So, Samyak, thank you. You actually brought the conversation to the second part of my question, because one part is the learning, right? What I'm curious to know is how have those learnings sort of translated into your future strategies? So, I'd like each of you to sort of give us examples that these were the learnings we had in 2020, and now this decision has become a key aspect of our strategy going forward. Chintan, let's start with you. Can you think of something?
Uh, so, like Samyak said, I think I would like to elaborate a little bit on that point. Is that people did not pay so much attention to detailed cash flows, or mapping out all the different aspects of costs, and having contingencies or having buffers in place. Especially, that's how real estate has been. Real estate has not been a very deeply organized business. So it has worked in the past. It has worked for a long time, and in fact, but I think that is about to change. And we've learned that. Obviously, everybody has learned that the hard way in the last year or so. But I think we have also implemented this as a thing where a 3 month or 6 month horizon is something which we look at very, we scrutinize it in a absolute microscopic level, and we make a less elaborate long term plan. So implementing that, putting that into like a weekly or a monthly or a fortnightly review, and then making those changes, having the team down the line, not just your top management who sits in the meeting, but having the team down the line, your managers, your construction managers, your sales managers, your MIS guys, your finance team, everybody is together, everybody's working on that model, that every month I'm going to have to put up my numbers, and there's going to be an accounting of whether we are on target or are we off target, or if we are off, then how much off, and what do we need to do in the next month. So that sort of stuff, I think all the guys who are doing well today, or standing today, are doing that already. And I think going forward, people will have to sharpen those skills further. So this is what we've been doing to, this is one learning we've taken from last year, that, looking at your business in a slightly different manner than we have been looking in the past.
Yeah.
And, not also to have a strategy in place for a future pandemic or a future, I don't know, some event, let's call it a pandemic, but it could be any other event, and not be caught sleeping a second time, because I think most people have been. I mean, not just India, not just real estate, but the world over. And a lot of thinking has to go in at every level. Even at a household level, in your own house, you need to know, tomorrow there's a crisis. I need to have a plan in place. The key people, I need to know that this is the steps to be taken. That translate that into an office, translate the office into an industry, and then industry into an economy. So everybody needs to have that in place, and that is something we again have been taking that very seriously. And we already started working on having a strategy in place for a future event. So these two things, I mean, on the business operation side. And with respect to the customer side, the learning has been very different. I think that is more to do with the changing preferences and how psychologically COVID has impacted everybody. How the home has become a center today, where it's not just, I need to buy a house which is close to work, but today I need to think, I need to buy a house where I might have to spend more than 8 hours a day. I might have to spend 24 hours a day. So will I be able to live in my current house? Will I be able to make do with what I have? Or should I look, or I'll go a little further to another location, or maybe I'll change my preferences. But those questions that people have been forced to ask themselves, their families, has really brought about a shift in the customer mindset. And I think that will get translated into design, into planning, into projects in the coming 6, 12, 2 years time.
Yeah. So would it be safe to say, because you're all proprietors, that, COVID has created some fundamental changes in the way you are doing business? Is that something that we can say with certainty?
Yes, it has, absolutely. I think, and I think COVID more than anything has been the right excuse, mind for a better word, but the right excuse to make those things happen. The right excuse to push those people to work, the right excuse to push people out who are not performing, the right excuse to look inwards, the right excuse to talk to, because all of us have fathers who are in the business, uncles who are in the business, grandparents who are in the business. Right excuse to talk to them and tell them, boss, what, the world is not what you have seen. The world is changed, and this phenomena is new. It's as new for me as it is for you. So that kind of questioning, especially in family-oriented businesses, has come about. It's very sudden.
So I'm going to touch upon some of the bottlenecks. You've already spoken about the labor situation. All of you have sort of asserted, that the labor situation has eased. Some of you, when we were talking earlier, you mentioned, that it's almost back to the pre-COVID levels. I'll come to the second bottleneck, and that's the funding situation, right? That has been a major pain point for all developers. As associations, you have reached out to the government for help. Where are we with the funding situation? I mean, are you in a more secure place right now? Do you think still a lot more needs to be done? What do you think, Rushank? Let's start with your views.
So I think there are two aspects to this conversation, right? One is the actual numbers on the ground,
Yeah,
and I think those are in that sense similar to they were last year, which is the amount of loans taken, the percentage, and so on and so forth for developers.
yeah,
But I think the second is a confidence aspect,
yeah,
and like you mentioned, all of us seem to be young over here. So I kind of joined in 2011. So it's been one of the better quarters I have seen since I've joined the business, right? So we've had a black swan event pretty much every year since 2012. And so, but this is the only one which has come with a legitimate silver lining.
yeah,
And so I think ultimately for funders, for us as developers, a loan is ultimately always on the liability side, right? So the moment you see liquidity coming in via sales, and like we all mentioned, maybe the collections are a little slow, or maybe we are giving a little more time to people than we would normally. But as long as we get volume and as long as we get sales, and it seems to be, so if you look at the registration data, it seems to be across segments, across I think then more and more we'll find that funding gets easier, because ultimately even a banker is looking for an exit, right? That's the end game. So and again, this is specific to Bombay. We've had a sort of hectic few last 3-4 years. But if you look at the exits that developers have given in Bangalore, if you look at the exits developers have given in Hyderabad and even Delhi, they seem to be doing fine. And I think they seem to be doing fine because on that commercial side, the demand was always there.
yeah.
So I think if we get another 2 or 3 quarters of this kind of demand, and if we get some help on the stamp duty side and pricing side, then I think the loan and the liquidity side will take care of itself, because wherever there is sales, I think banks will follow.
Got it.
So to put it succinctly, I think as developers, whatever we've been doing the last 3-4 months, which is give better pricing, get a little bit of a stamp duty absorption, and again the premium reduction will help. I think we continue to do that. We continue to push sales. I think that will then help us move forward.
Manan, do you agree with Rushank's point of view?
Yeah, definitely. And there are a couple of more points, when to push forward. Like, because of 2020, there are a lot of things which I'm sure all the developers might have learned is to cap on the over trading.
Yeah.
Like, a lot of developers had over traded in the past, and they've seen a big blow. And since 2012, like Roshank was saying, like this was one of the, I would say, in fact, it was one of the finest years in the real estate industry, where there was a sudden jump which everybody felt in the last quarter.
Yeah.
And one of the most other important aspect which we've learned is, so see, real estate is mainly a finance business. If you
Yeah.
see, it's either you're dependent on a customer's money, or you're dependent on the construction finance or the investors, right? But I would say if you can proportionately plan your expansion and the growth of the company, and minimize the debt ratio, it's very very important. So I can say, like my company has historically, until date, the parent company has been debt free. So during the pandemic, it was very very comfortable for us,
Okay.
because I did not have to service any of the banks. And that was one of the most important things which we think should be a part of every developer, that if we minimize our debts and have some sort of an emergency liquid chunk kept, it definitely helps in these situations. Because what happens is, you've got small labor contractors, right? You've got small suppliers. Now if we don't support them, they're going to get bust. Now what happens is, we are not getting liquidity from customers,
Hmm.
banks were not functioning. So
Mhm.
everywhere there's a liquidity crisis which was arising,
Yeah.
around the developers. So that small chunk of emergency fund always helps us.
Yeah, yeah. So Anuj, would you agree that, right now both the labor and the liquidity crisis, both the crisis has eased, and, things are looking better for the sector?
So yeah, I'm coming to the first point on the labor crisis which we faced in the early months of the lockdown. That has certainly improved drastically in the last 2 3 months or so. We are seeing that no matter how the laborers, the contractors are finding a way to get them back to the city, be it they're coming by train, laborers are flying in instead, or they're coming in trucks. But still, I would say the laborers are back, but they're in high demand, and their costs are rising because of the exodus of huge metro projects, be it even the coastal road, the Trans Harbor link. We have seen that there is a heavy demand for the laborers, and they're on the constant move to jump from site A to site B,
Yeah.
even for like a small 2%, 5% raise.
Yeah.
So it's important to keep them comfortable, give them a good living environment. So even though maybe they are not getting the same raise in the current company, they have a good environment to live at least. And addressing your second question on liquidity,
Yeah.
I feel even though the year has had its ups and downs,
Yeah.
liquidity is still I would say a sizable challenge for most developers.
Yeah.
It's a matter of time. It may take 1 or 2 quarters for the further confidence in banks, NBFCs, HFCs to come back into real estate.
Yeah.
We've had one good quarter with good numbers, but it's essential to show this performance on a quarter-on-quarter basis to even ensure that investors do see a steady horizon.
Yeah.
And if anybody, if developers do plan to go public down the line, they have to ensure that every month or like every quarter is performing equally.
Yes.
So to sum it up, I would say that definitely things are getting better, but it will take further like a quarter or two for liquidity to further improve.
Yeah. So, Samyak, Anuj has sort of, he's raised an interesting point that yes, the last 2 quarters. So Q3, aided by the festive season, of course, the uptake was better. Q4 was better than any analyst had anticipated at the beginning of the year. But the real question now is this momentum, can it be sustained in 2021? That's the question that we're all asking ourselves. What's your take on that, Samyak? Do you see the momentum being maintained?
I'll quickly answer the previous question. I'll come to this one. So a few challenges, labor, I think by and large, we are seeing most of it come back. However, in the prices of your commodities and the lead times for some specific, equipments or products, that seems to be a challenge. If steel prices have gone upward of 30% in just 4 months. I mean,
Yeah.
which is hurting all industries, but it is especially hurting our industry because we are an industry where you've sold and then you are constructing.
Yeah.
So your price is already finalized, but you have to take care of the increase in cost, if any. So that remains a challenge. Just a bit on liquidity also, I think liquidity is available, but a bigger issue also is at the rate or the cost at which it's available. There was a time when it was available much cheaper. Right now, all the liquidity that is available is very, very expensive. And I personally feel beyond a threshold rate of interest, it becomes very unsustainable for real estate projects. And not to forget that this becomes a cost on customers eventually, because any cost which is incurred or increase in cost of steel, or let's say even liquidity or loans, get passed on to the customer eventually. It might not be right away, but eventually they get passed on. So these are challenges that remain. Just coming to 2021, we do see that till March, the momentum will continue.
Okay.
As the government has announced, the stamp duty has been increased by 1%, but that we think a lot of customers are still ready to are accepting. What needs to be seen is obviously what happens post March, whether the government increases the rates or they keep it the same. If they keep it the same, I think the momentum will continue. If they don't, that's something that we'll have to see. Also, on Mumbai, because a specific policy announcement has been made, we do think that the momentum will continue in Mumbai. Sales volume will be there, and given the cost reduction that a lot of the projects will see, you will see some bit of, if not price reduction, but some sort of flexible payment schemes for clients so that they can take advantage of it. So wherever this policy has had a huge impact, we do think the momentum will continue. But for every other area post-March is something that we still need to evaluate.
So Chintan, what is your crystal ball gazing looking like? What is your take on, what the momentum will be like for this year?
So I think as Anuj and Samyak both have said, but yeah, look, especially Mumbai and the MR region, the government support is continuing and it will continue. And I think that itself it has already been seen that the government push itself can generate so much demand that it's unforeseen. So so till March, I think there is no doubt that the momentum is roughly going to stay the same. I think post March also there will be a little bit of a how do you call that lingering thing that will go on, but post June is frankly, I mean, tough to look into the ball and say what it's going to be like. But I think the segments which were doing good before COVID, especially the affordable, the aspirational side, the smaller ticket sizes, I think they should continue. I think that there is just too much demand in that segment, and along with the cost of home loans having gone down and the central government schemes all put together, the current environment that we are in, and the pricing being at its bottom, I think that segment is a no-brainer. I mean, that momentum is going to pretty much stay, in most of the pockets, barring a few. But I think luxury side is a question mark, because the luxury side, everybody's jumped in to take advantage of the situation. I think once that goes away, it's going to be a huge question as to what kind of uptake happens in, say, the second half of this year. And I think a lot of that will also depend upon, now that the moratoriums are over in the industry, in the economy as well. So what kind of NPAs come? What is the health of the economy overall? So that kind of stuff will take a lot of, sort of bearing on luxury and the higher end segments. I think because a lot of people who had money, liquidity, who were looking for homes, got the right opportunity. They got the push to jump in. And I mean, by lot, I mean, unprecedented amount. Most of the developments which were finished or near possession, I think in this quarter have sold, and they've sold phenomenally. And that just shows that people were just waiting for that excuse, we've got, this is the bottom, or this is pretty much where we are now, and everything else is going to be upwards. Yeah. So once that momentum goes away, it's anybody's call in the luxury segment. But affordable to mid income, I think it's going to do very well.
Manan, do you agree with what Chintan said?
Yes, definitely. And if you've seen in the past, no, the typical trend in India for investments had been SIP, mutual fund, stock market, and gold.
Yeah.
So real estate was never considered in the last couple of years as a good investment opportunity because the prices were not going high.
Yeah.
And all of a sudden in 2020, everybody realized the importance of the house. Like not just renting it or co-sharing it, but to own it, right? You don't want to take an obligation of someone during a lockdown that, okay, I want you to leave my house because you're staying on rent and I want the house empty, right? So everybody understood that buying a house and owning it is a much better opportunity. So you would be shocked to hear that, all the sites, whether it's the affordable segment or the luxury segment, have been doing quite well post September. Definitely, government has helped a lot regarding reduction in the stamp duty. And that's what motivated the customers even furthermore that let me book before December to avail that 2% benefit. And the sales have been skyrocketing. Yeah. And 1% increase in the stamp duty post December, yes, it is a hit, but I'm sure like the way developers have also designed their payment schemes, a lot of people are actually absorbing that 1%, that it's fine, it's part of your entire enterprise value. And the momentum is continuously building up, especially even after December. I'm still seeing we are in midst of a project launch, and we do see like 100 walk-ins every weekend, and we also see a lot of conversions still going on. So it's not that 1% of stamp duty has pushed back the customers, but the momentum is continuously building up, and I would definitely see at least till March, because there was a dry sum, I would say, in the past couple of years where a lot of people thought, let me invest in something else, get a better return, and only if required I would buy a house. So that mentality has changed drastically, because when we are speaking to customers, they've been openly telling us that I had a lot of money parked in mutual funds or my stock market. I've made my money and I just want to have a secure future for my kids or for myself. So I think 21 should be a bright year, at least for the first half. Then let's hope for the best.
Yeah. So Anuj, your peers clearly agree, that they, at least for a few months, they are seeing the momentum, as continuing momentum. Tell me, do you still see affordable, as the segment, that will take the lion's share of sales? Because, and this is where I'm coming from. I remember when we were doing our analysis in the middle of the year during the lockdowns, and a lot of analysts at that point of time, thought that the recovery will actually be led by the luxury segment because of all the uncertainty that was there in the job market. And yet again, the affordable segment has taken us by surprise, like it often does. And, it has been like the clear winner, in all of the sales momentum. Do you think that the affordable segment is the one to watch out for even in 2021?
I would say that it's a fair mix also. See, definitely affordable housing is hello.
Yeah, yeah. You're back.
Yeah. Hope you can all hear me.
Yeah, yeah,
So
we
I
can.
was saying that definitely with how we are seeing affordable housing growing, and with the PM's push as well towards affordable housing, it's a sector that is going to grow, given that how sheerly massive our population is, and due to the scarcity of homes. So even a very small home definitely will do well. But I would not say that luxury housing is not going to perform. We have seen that luxury housing does perform, but
Okay.
given that the customer wants a very interesting or like a very flexible payment plan, although the customers mostly do have the liquidity to
Yeah,
go for a regular construction link payment plan, but I think the all developers in luxury are coming up with some interesting scheme for luxury housing.
yeah,
So the customers are very much inclined to have a scheme being offered to them. And as long as you have a good payment plan, you have a good payment structure in place,
yeah.
affordable housing, I would say definitely under 3 crore would do well.
All right.
But even as Chintan mentioned in the past that there's a huge question mark for large ticket homes. Although they aren't being planned recently, I think lots of developers have stopped planning like a building consisting of only 4 and 5 BHKs.
Yeah,
It's going to be a surprise, and I mean we would be glad if the market is back that way, because that allows for even cost to be kept under control. You have less number of bathrooms, less plumbing, less firefighting shafts in total.
yeah.
But that remains a question mark, and hopefully we see the trend coming back
Okay.
and people coming back to buy larger homes in the future.
Rushank, I'm going to shift gears a little. I'd like to talk about the type of inventory that's finding favor. So, we recently launched our Prop Tiger Q4 report, and we did a consumer sentiment survey. And the finding was really interesting, where 63% of our consumers said that they would prefer an RTMI home. Currently, only 27% said that they would like an under construction home. Now, my question is this, traditionally, under construction homes have been important for the sector, right? The money that you get from these bookings, it has been an important source of funding for a project. So now this very clear shift towards RTMI, tell me, how does that change the way the construction business is happening, the way the real estate business is happening? How does this preference change impact the overall business?
So I think one of the first things it does, and I think a couple of people on the panel mentioned as well, is that you try to become a little smaller, right? So as a company, you try to take less debt, and you focus on what you have, because ultimately, if under construction products don't sell, then you can't have that many products to offer. So I think that's one of the first things that you have to take care of. Having said that, I think part of it is to do with the law, right? So the cost in a city like Bombay, with it being 12%, with the approval delays that we faced over the last 5, 6 years, are part of the reason why people don't want to take an under construction project. With the premium reduction, with the GST now at 5%, albeit without a set off, I think that might change a little bit. I also think in a city like Bombay, honestly, if you're a fund, let's say, and you wanted to buy 75 apartments with OC in Prabhadevi or in Andheri, it's still not available. So while people would prefer to move into a ready to move in, I don't think we have the kind of supply of ready to move in that at least a city like Bombay would require, right? So I think out of a lack of options, people would still have no option but to move into an under construction. So I don't think it'll have as big an impact on under construction because I think a survey asks people what they like or what their ideal case would be. But when you go right down to it, I think the pricing difference and just a demand supply mismatch would mean that you would still have a lot of people being forced to, so to speak, for lack of a better word, buy an under construction property. I think another thing that'll happen, and we've already seen that happen in the commercial side, right? If you have good tenants and good properties, we've had a lot of institutional money flow into the commercial market. I think with the Model Tenancy Act, if that's implemented the way it should be, I think kind of like the way the rest of the world works, I think you'll have a lot of institutional money coming into residential realty as well. And then they'll lease out that. So that's the one asset class where I think India is very different from the rest of the world. You have almost no institutional money in residential realty. It's just purely either loans or end users. I don't really count investors because at least in Bombay, they don't make up a significant percentage of the market.
Not anymore.
Yeah, but I think once you have the Model Tenancy Act come in, and if a Blackstone can believe that a 600 unit building in Andheri can give them ready revenue, then I think you will have a lot of people more confident in sort of funding that on the equity side more, which will allow us as developers to build those as well, and then either sell them after they're ready or lease them after they're ready.
All right. Samyak, does it work as a point of concern for you, this sudden shift, towards RTMI homes? And we've seen this all across the country. We've had a lot of our developer friends, tell us, that their ready to move in homes are obviously selling much faster than under construction projects. From a business point of view, what's your response to that?
We think that is true, but there are some, you have to consider a lot of things together. So obviously, clients want ready to move in. However, there are other factors, and what we think two other important factors are obviously affordability and choice of inventory. We have seen a lot of clients who, now most of the sales that we all have seen over the last few months has been in ready to move in. And now when they're coming to see what is left, which is not much, and when there is not ideal, view or ideal area that they're looking for, people are choosing to buy under construction. However, they're choosing to buy under construction where they see or they feel that it is getting delivered. So if you have, hello, she's done. We can hear you.
Yeah, it's fine.
Okay. So if a project is stuck or where construction progress is not happening, we are not seeing as much traction. But yes, choice of inventory and affordability are also factors. And if all those three don't match, then RTMI may not be the option that clients will choose for. So that's something that we have observed. Along with that, I think there has been a fundamental shift in the product that clients want also. I think open spaces layout open spaces are very much in demand. And we have also seen a general increase in demand for homes with terraces, with nice, efficient floor plans and things like that. So those were things that, people probably thought as a liability before the pandemic, but now they really value those areas and in fact are ready to pay premium for that also. So, if your product is good and it is probably more affordable and a better choice of inventory than what you have in RTMI, you will still see some buyers for the under construction.
All right. Great. Thank you so much. Now we just have time for one last question. So here's my question to all of you. We are in the pre-budget phase. So with your closing comments, do let us know, what your budget wish list would be. Manan, let's start with you.
So that's $1 million question, I would say, your wish list, which everybody really wants. So there is the additional tax benefit of that 1.5 lakhs for home loan interest was announced previously,
Yeah.
and which was only given to the people who are buying home, which is worth 45 lakh rupees.
Yeah.
Now, if that extension can go significantly high, I'm not saying like in like a 3 crore plus, but at least till 1.5 crore also, a
Yeah.
lot of larger market share can be captured, and metro cities can also take the benefit of it, because I'm sure all of us would agree that in a city of Mumbai, buying a house at 45 lakh rupees is very difficult. I
Absolutely.
mean, you can get it in the outskirts, but in the center of the city, or in western or towards south, I barely doubt that it's possible. And another thing would be 1% GST was again given to the affordable sector. And we've been seeing only by reduction in stamp duty, Maharashtra or Mumbai has seen significant jumps in the buying process, which has convinced customers that let me go ahead and buy, right? Imagine if that this 1% GST is passed on to developers. I'm not saying permanently, but at least till March 23 at least,
Yeah.
or March 22, I would say, worst scenario. A lot of economical scales I see changing, because believe it or not, real estate, I would say, is one of the most impacting industry for Mumbai, which
Yeah.
is having the other counter businesses getting affected by it, right? So if real estate goes up, the stock market changes, steel industry, cement industry, a lot of cash flow starts churning in the market. So these are the two things which I feel would definitely give us a big boost, and would help a lot of customers as well.
Absolutely. Anuj, what's your wish list for the budget?
Um, uh, I would say it's that few points are similar to what Manan mentioned.
Yes.
But a few other points that I believe that the industry is proposing to the government would be some changes in the ATIV scheme.
Yeah.
Right now, we're seeing that getting a home under 45 lakhs in Mumbai is nearly impossible.
Yeah.
So if they remove the cap on pricing,
Yeah.
and they only keep the price, they keep the cap on the size.
Yeah.
We are propose we would like it to be kept at 60 square meters for like a metro one city, and for other sister cities it could be kept at 90 square meters,
Yeah.
to ensure that a lot of customers get advantage of 1% GST.
Yeah.
Secondly, we feel even getting some kind of input tax credit back on real estate. However, this may not be under the finance ministry's purview. It may go to GST council. So if they can somehow come up with a group decision being taken and reinstate ITC into real estate. And lastly, um, uh, definitely we would like that subvention schemes are reintroduced, that will aid customers drastically compared to offering a developer subvention constantly.
Yeah.
And lastly, even the industry would be happy if real estate is awarded as a infrastructure status. That would enable easier sourcing of funding, maybe even a priority for bankers to look into real estate further.
Yeah. Okay. Rushank, how do you think the budget can help the sector? What can the budget do for us?
Sure. So I think a lot of people have mentioned various factors. So I'll stick to just one thing that I think can be done very easily without having too much of impact on the funding that the government gets from the sector. I think um, other than for the purpose of stamp duty and GST,
Mhm.
the concept of ready reckoner rate should be removed. I think that maintains you still pay GST as per stamp duty. You pay your GST and stamp duty as per your ready reckoner rate. But
Yeah.
the income tax implication to a buyer or to a seller that wants to sell, especially again in metro cities in some of the locations. So we have projects where the selling price in that area is 20% below what the ready reckoner has reached, and that's a huge impediment to sales happening.
Yeah.
So while you can keep the ready reckoner so that the government doesn't get shortchanged on the stamp duty and the GST,
Mhm.
I think for the purpose of income tax, the ready reckoner should not matter and it should just be calculated on sale price. I think
That's
that
interesting.
that would not harm them,
Yeah.
but still allow all of us to sell at the value that the market decides, and then we can sort of proceed. So I think that would be a small thing that would be pretty useful.
Chintan, is your wish list for the home buyer? Is it for the industry? Is it for you? Who is your wish list for?
I think my wish list is for the industry, because this industry does need still a lot of hand holding, and real estate contributes in a big way to the economy, directly 7-8%, and indirectly I think another 4-5%, and not just in percentage terms, but also in terms of labor, in terms of the how money flows in, the sentiment. Psychologically, real estate is a big play in any economy, not just India. And even post pandemic, where people are expecting a housing crash or whatever, and that's not happened. This one quarter has shown that sales have rebounded, and there is some sort of inkling of hope for the real estate industry to start coming back up. So I think the government should do whatever it can. I mean, people have on the panel mentioned multiple points on how they can help us out, but yes, they should look at bolstering real estate in a way that at least in the medium term, I'm seeing a 3 to 5 year horizon, they should keep in mind and do something on that lines. That is definitely the need of the hour.
Yeah. So Samyak, the last words come to you. Do tell us a bit about your budget wish list.
So a lot of points have already been mentioned by my fellow panelists. But one thing I think which we also observe is whatever little funding right now is available is for literally the tier one real estate developers, and there are a lot of end users who are who might have bought in the past with a tier two developer, and there are a lot of stuck projects with that. Swami Fund, which was launched by the government, is a great initiative focused for this. However, the problem is huge. So if there is any way we can increase the quantum of funding available to Swami, or create more such alternative investment funds, I think that would be a great benefit to so many such home buyers who inadvertently, unintentionally, bought in these projects, so that they can be revived and they can finally get their homes.
Yeah, and I will add my wish list to that. So the funds are important, but so is the deployment, of these funds and the speed of that deployment. So thank you, panelists. This was a fantastic discussion. Thank you so much for your time. Thank you, audience members, for joining us. We do hope to see you soon. Till then, stay safe and stay healthy. Bye-bye.
Thank you so much.
Thank you.